Hello traders, and welcome to lesson 17 in the ReadFX Beginners Forex Trading course. In this lesson then, we're going to answer the question, what are round numbers? So in the previous lesson, we looked at support and resistance, and we looked at 3 of the 4 types. We covered horizontal, diagonal, and dynamic support and resistance. Now the 4th type is psychological support and resistance, also known as round numbers. So round numbers are price levels in the market that appear at set intervals. They are an incredibly powerful type of support and resistance because of the way that our minds work. So let's have a look at some examples on the chart. Okay, so here we are in trading view, and you can see that we're on a 1-hour chart of the pound US dollar. Now you may remember in the previous video that what I did was I got the crosshair tool and I started to line it up looking for swing highs and swing lows that line up to draw support and resistance. Now with round numbers, with psychological levels, we don't need to do this because we're not actually interested in the points in the market to draw our levels. We're only interested in the price. So round numbers then is about picking literally the round numbers. So here we can see the 123,000 or 123. So we will draw a line at 123, 122, 121, etc. And what that means is that we can actually draw them in advance. So if I just unhide my lines, and you can see, if I just zoom, you'll be able to see that what I've done is I've drawn literally every 100 points on exactly the round number. I have a horizontal level on this chart. Now there are indicators in TradingView. You can just search the indicators that actually do this for you. I prefer to draw them manually. But what I'm going to do now is just show you how powerful these levels are. So remember, when we get a bounce from a level, then if we use this level as an example, we don't always get a perfect reaction exactly on the level. And what we should in fact do is view levels as a sort of a zone. So if you imagine a little blurry sort of rectangle, and we're looking for reactions when it starts to get into this grey zone, so either just before a level or just after a level, but anywhere sort of in this space is a reaction at the level. Okay, so let's have a look and see how round numbers actually work then. If we start on the left of the screen, let me zoom in a little bit. We're on a 1-hour chart, so we're going to be looking at the closes, the opens, the closes, and the wicks. So the first candle that touches our round number, you can see it immediately wicks and it closes within a few pips of it. The second candle closes almost on it perfectly. Third candle, very clear reaction. You can see it's tested it and then, you know, sort of closed just above it. And if we just work our way across the chart, you can see so many times when it's interacted exactly with this number. Price pushes up, it's trying to get to the next level, it can't make it, it falls back down. Where does it come down to? Exactly on the round number. And here you go, you can see price is sticking to this level, it's trying to get away, it's trying to get above, it's trying to break back below. Eventually we get a push down. So we get a push down, where does price go to? That's right, the next round number. Again, we get a little bit of a break. Price is trying to reach the next one down. It can't. Pushes back up. Where does it go back to? The round number. Same again. Pushes back up. Goes back to the round number. And this just sort of repeats itself. Look at this break and retest. Price breaks through the round number. Can't make it to the next one. Falls back down. Where does it go to? The round number. And you can just see this time and again. It's absolutely brilliant. Look at this break and retest. Perfect break. Retest right on the round number, a little bounce again, retest from the underside, and it repeats the same pattern again here. Look, perfect break, retest, over and over and over. We see the round numbers being respected. Now if I just zoom right out, and you can sort of see just how well these round numbers work. Look at this fantastic range here, just completely contained between these two round numbers. And we have some other levels as well that I want to talk about. So in addition to the 100 point or 100 pip round numbers, there's also levels within that. Okay, so we also have 50 pip and 25 pips. Now these are called halves and quarters. There is something called quarter theory which plays with round numbers very well. So what I'm going to do, if I just I've dropped down to, let's say, the 5-minute chart, just because I want you to be able to see the reactions of the smaller time frames of the candles sort of within those 1-hour periods. So here we go then. If we look at the 100 pip levels, price seems to be reacting now in the middle of nowhere, and it doesn't really make any sense why these moves are happening. So if I take my modified fib tool and stretch it out across this 100 pip area, Now all I've done here is I've set a 25, a 50 and a 75. So I'm literally just dividing this area, this 100 pip area, into 4. So this red line is 50 pips, and each of these dotted lines, these white lines, these are 25 pips each. And immediately you can see that we're getting reactions in the same way that we did on the 100 pip round numbers, particularly at the 50. The 50% level is absolutely brilliant. It's a very powerful psychological level, and this is because of the way that the human mind works. We do everything in whole numbers, halves and quarters. I mean, if you think about the way you tell the time, you constantly round it up. Even if you have a digital watch that tells you the exact time and it's 11:43, you would not say it was 11:43. You would round that 43 to 45. You would make it to the 3/4 of an hour. It's just the way that we've always worked. When you go into a shop and you see a price, you immediately round it up in your head. If something is $1.97, it's $2 in your head. You round it up. And this is exactly what happens when traders use round numbers. Nobody quotes the price, nobody says, I'm going to buy at 122,966. Nobody says that. You would say, I'm going to buy at 123. This is the whole concept behind round numbers and why they work so well. So the 100 pip round numbers are obviously, that's your biggest rounding. You round into 100. And then to make our life easier, we also like to round to a half or to a quarter or to a 3/4. And that's literally exactly what you're seeing on the chart. When you can see these reactions every 25 pips, there is no other reason for this to happen apart from the fact that this is how traders buy and sell, and this is how traders set their orders. And the reason that price is going slightly above or slightly below is partly because of the spread, because the spread will be a few pips either side, which means your orders rarely get executed exactly at the level you want. Another reason is slippage, which also causes orders to not be executed exactly at the price you want. And another reason, as I explained in the other video, is that traders will set their orders either slightly before or slightly after. If we set them slightly after, let's say I wanted to sell from this level, if I just zoom right in, if I wanted to sell from this level, I could put my order slightly before to guarantee that I get in, or to increase the chance rather that I get in case price doesn't make it. Equally, if I'm very confident price is going to make it and I think it's going to wick through like it does here, I might think, well, why should I sell here when I could put a sell order up here and get a better price? I've actually, by the time it drops away, I've probably made an extra 5 or 10 pips profit just by setting my order a little higher. So this is another reason why price why price rarely reacts exactly on round numbers or any support and resistance level. You can see this one here, it is actually reacting almost to the pip there, but on the one below, it isn't. And this is just because people are setting orders or because they're pressing buy and sell slightly before the level to get in. So that then, in a nutshell, is round numbers and psychological levels, which is the fourth type of support and resistance in Forex trading. In this lesson then, we looked at round numbers, 50% levels and quarters. In the next lesson, we're going to look at trends and consolidations.